roller coaster for sure. Okay, so today's lesson is going to be a psychological lesson, and it's going to be on the idea of have, well, as you guys can see, right? Have, do, be versus do, be, have. So this is, I'm going to explain this. Versus do, be, have. This is what we're doing today. Let me put this all in one line. And this is a psychological framework that I utilize, right? That I utilized to become, I think, a profitable trader. This was one of the biggest differentiating factors in my mindset as I was developing. Okay, we have 15 people here. What I wanted to do as well quickly before we do this lesson is I wanted to quickly review today's price action as well if you guys want to, so I can post both and not have to record a separate video. So what we'll do is we'll quickly hop into this chart, spend about 10 minutes reviewing this price action of what happened today, and then we'll hop right into the psychology lecture, just so I can kill two birds with one stone and not have to record a new lecture for today's review. So let's talk about what we saw in the market today. There's only one major thing I wanted to go over, which is why I wanted to do a lecture, which was this piece of price action in the morning and why I knew today was a likely long day as opposed to a high quality or high caliber short day. So as we know about market cycles, right? So the topic of this market review is going to be market cycles based. Okay. So as we know about market cycles, we can kind of identify how the price delivery continuum, or IPDA, delivered the past 2 days, or the past week really, okay? So let's start off by looking, first of all, at how the weekly candle opened. So as you can see, the weekly candle here, we'll draw out a little box to note that, right? Monday opened, and immediately we expanded higher for Monday, Tuesday, and Wednesday. Now the dynamics of this weekly candle by Wednesday, oh, I'm not sharing. Thank you very much for telling me that. Eyes looking beautiful. Yeah, I forgot that I wasn't sharing. Okay, so the dynamics of this weekly candle began with an open and a high being formed in the week. Now, as you know, this weekly candle prints up until Thursday looking something like this then. Okay, excuse my art, it's not fantastic, but you get the gist. This is the weekly candle going in to our Thursday CPI folder. Now, as we know, when we see very little manipulation of a weekly candle, and we're talking about very small amounts of wick being formed in here, right? Very small wick. We are likely to see something called a Thursday reversal, or in this case, a consolidation reversal. And we had the candidate for this reversal by seeing the way Monday, Tuesday, and Wednesday printed. So as you can see, we had this imbalance, right, from last week on the daily chart that was not traded into. We left it as a swing failure on the Friday. Okay, right in here. Now, Monday, Tuesday, Wednesday expands higher, creating a consolidated range that is never purged. So we never manipulate this Monday range, which I'll mark out with this box. And you can see we also add consolidations on both Tuesday and Wednesday. Now this Tuesday consolidation is purged, and this Wednesday is a very choppy day before we expand at 12 p.m. in the PM session. This entire profile here and the associated swing failures of this market, right, make this a very, very high confluence Thursday reversal profile, which we talked about. We were all expecting it, right? We all went into Thursday expecting to see some run on liquidity and reversal lower. Now, what I want to pay attention to in specific for this recap is I want you to draw your eye to this piece of price action in here and this piece of price action down here. And I want you to make note of the similarities that you see in price delivery. These aren't random ways that price delivers from external ranges back into the range or seeking opposing liquidity. This right here is a function of market cycles. So as you can see, so far in the week, we have something that looks like this, right? Monday, Tuesday, Wednesday, right? So we have Monday, Tuesday, Wednesday, and then we had this Thursday candle that looks like this, right? And then we had a Friday candle that looks like this. This is the weekly profile. Monday, right? Tuesday, trying to make this more symmetric. Wednesday, Thursday, Friday. So some people in here might be saying, okay, well, today was an obvious TGIF type of setup, right? Because we reached our weekly objective, which was maybe delivering back into this imbalance, and we could look for something like this. Well, would you look at that? Look where the weekly candle closes, right at that TGIF setup. But Afiz, I thought TGIF setups were only on classic buy weeks. Not true. A TGIF setup presents when the Thursday meets the weekly objective. Whether that's a classic buy week that looks like this, Monday, Tuesday, Wednesday, Thursday, Friday. That's also another classic buy week, right? It can look like this. So that also has a TGIF candidate. So it doesn't matter when these weekly objectives are met, right? So it doesn't matter what day the profile forms on. If the weekly objective is met by the Thursday, whether or not it's a consolidation reversal, a Wednesday reversal, if we get this Thursday meeting the draw, Friday is likely to close back within the range. And as you can see here on the ES, we had that move higher today all the way into previous day high, and NASDAQ closes right at that TGIF range during the PM session, which was very interesting to see. That was something I barely even noticed this afternoon. But I hope while I've been yapping, you've had the time to review the question I asked you, which was what are the similarities in these two price legs as it relates to market cycles? Someone give me an answer. Purge of liquidity, then attack the opposing side. Consolidation, manipulation. High impact news, took both sides. AMD, good, I like these responses. Yeah, when we consider market cycles, let's consider the phase of delivery in here through each of these steps. So in this leg, we have an accumulation, followed by an expansion, followed by a retracement, followed by an expansion, retracement, expansion, accumulation. Perfect, all of this is permissible, right? Expansion, retracement, expansion, retracement, and then expansion into a consolidated range. All of this is by the book, continuation of market cycle. Now, if we want to reverse at this level up here, there is a prerequisite for a reversal. And this is why yesterday I traded long, irrespective of my idea that I wanted to see price trade lower on the Thursday. I knew that CPI would offer a long candidate because in order to have a reversal in the market, we need two things. All reversals contain an SMT and a higher time frame array. We know that. What we also know is that any reversal is impossible from what? Accumulation, expansion, retracement. Which one is it impossible from? 1, 2, or 3? 1, 1, 1. Nice. You guys have all seen the last lecture. So I know right off the bat, I'm not going to get a reversal from this accumulation. Well, this in here is an expansion into an accumulation. It's not, right? It's not, I'll say it, an expansion into a reversal into an accumulation, because that can trade lower. This is simply an expansion, no reversal. Why? No SMT up here and no higher time frame array. So we don't have these two conditions. And we also don't get any shift in delivery state or structure that's bearish. So up here, right, there is no higher time frame array. This is all-time highs. And we also have no SMT. All of this up here is all all-time highs. and no SMT up here. So I already know we're not going to be reversing from this accumulated box. Okay, let me also close some of these tabs so my thing stops lagging so hard. God, it's really laggy. Okay, that's better. So in this box, I know we're not going to be reversing. So what I see is that once the market forms this accumulation, there's only two options for us at this point in the market cycle. And that is going to be a bullish continuation, AMD continuation. So again, right, on Thursday, we expect a reversal based on weekly profiles. And that's based on the idea that Monday through Wednesday expanded, leaving very little manipulation below the weekly open. Okay. For this reversal, there is only one market cycle approved, I'll put it in quotes, mechanism. Or you could say permissible. This is going to be an AMD reversal. Okay? If we want to reverse, we need to see an AMD reversal. If we were to continue, if we were to have a classic buy week, which we did not expect, but could have happened, there is also only one a market cycle mechanism. And this is an AMD continuation. So by nature of the fact that we have come from an expansion into a consolidation, I already know the market will do one of two things, and that is it. And I have a high probability case, right? Thesis, and I have a lower probability case or thesis. The high probability case is the AMD reversal. Accumulation, followed by my two criteria I needed to reverse, right? SMT at a higher time frame PD array, and reversal. Accumulation, deviation of the range with SMT, distribution lower. Okay? That's what we got here with the YM. All right, you can see YM's nowhere near its all-time high, so we need to see another spike up, first of all, and another SMT put in. So let's go right here. You'll see that's where it happens, right here. Okay. Now, you might be saying, well, you know, the YM has been decoupled the entire time, so we want to see a different form of SMT. Fair enough, right? There will be a lower time frame SMT in here as well, contained within this reversal. On a lower time frame, it'll look something like this between the ES and NASDAQ as well. So the ES or the NASDAQ, well, one of them will make a higher high, and one of them will make a lower high, and we'll get an SMT that looks like this as well in that leg. Most certainly, if we are reversing. But both ways, we know that there needs to be an accumulation, a deviation in order pairing of the range high for it to go lower. If it wants to go higher, there needs to be an accumulation, a deviation of a range low into an imbalance or something like this, and then it will continue to trade higher and we'll continue to see bullish prices. At this point, because I know that the only option for this 8:30 news is to first seek buy-side liquidity, the trade thesis for longs, irrespective of whether I'm bearish or bullish on the daily candle, is going to be long. That is why I longed before CPI even dropped, because I had the structure that confirmed it on my hourly chart. So in here, you can see, what did I have? The same two things I said for the bearish case. I had my SMT that formed at CPI. Remember I said on stream, we're going to see the SMT form on the Newswick. And then we get involved in that SMT and we drive price into the high. We don't know where it's going to stop. I used previous day high and buy side liquidity as my target. Perfect. This is an AMD reversal with higher time frame array and SMT. This is the reversal from this accumulation. Accumulation, manipulation, short-term retracement is a higher time frame retracement is a lower time frame reversal. There's the SMT, and boom, right? Each phase of market delivery begins and ends with a smart money technique. Fantastic. So now, whoa, my trading view is completely lagged out. There we go. So now that I have that, I now can see how price trades alongside the weekly expectation, right, which is going to be a consolidation reversal, and price leaves our nice little consolidation box using AMD reversal, AMDR, okay? and this is an AMDC. These are two terms I use all the time, because we get markets that look like this all the time. Look, study this. If price wants to trade lower, it must deviate this high with SMT. It must. If it does not deviate this high with SMT, it will not trade lower. Go in on the YM and prove it to yourself that there was an SMT at those highs. If price wants to trade higher out of this accumulation, there must be SMT at these lows. There must be an AMD continuation. Once we put in an expansion leg in the market and start to accumulate, oops, I picked the wrong thing. I should have used my drawer. Once we put an expansion leg in the market and start to accumulate, the only way to move higher is AMDC, right? AMD, and this is all part of a continuation pattern. And if we want to reverse, there needs to be an AMDR, which means there will be an SMT and some sort of PD array up here. Okay? That's the foundation of market cycles. The market won't change. It will always do this. It's a function of order pairing. There needs to be order pairing, and there needs to be an SMT cracking the correlation, and accumulations do not reverse. So expansions can reverse, which is why you see wicks on the higher time frame, because on the lower time frame, I can assure you this looks like this. I don't need to even see it on the lower time frame. This looks like this. It's candle body up, candle body down. It's not a wick, it's two bodies right in here. I can prove that to you by just filtering down a time frame. There you go. This is no longer an accumulation reversing. This is A into expansion, and the expansion is a form of manipulation. Remember, manipulation is just another word for expansion. What type of expansion is manipulation, right? The question becomes. Manipulation is expansion opposing the draw, right? Distribution is expansion in the direction of the doll. I spelt every single word here wrong. Sorry about that. That is what types of expansion are. Manipulation, distribution. Both are expansion nonetheless. So in here you can see we form our AMD, right? Reversal using very, very basic market cycle concepts, but nonetheless incredibly powerful. Not understanding this would leave you questioning why I'm comfortable longing the CPI candle here for 80 points when I'm clearly bearish on the day. I am bearish on the day, right? This is my high probability profile. Doesn't matter. Market's not reversing out of this. If it goes lower, it'll trade higher. If it goes higher, it can then trade lower. If we were to do this, what we would do is we double purge. This is a manipulation. This is the range high that is yet to be purged. We'll purge that. We'll pair it with these lows. And this is where you'll get something that looks like this. And you see that all the time as well. This is what we know to be sell stops, buy stops, sell stops. This is a double purge. It's when the market performs a different protocol, which is not an AMD reversal, but it's a double manipulation or a double purge, right? Accumulated range, take the sell stops, take the buy stops, take the sell stops. Because we need to purge this range high with SMT. It needs to happen. Once the accumulation happens, you will not get reversal. And you can prove it to yourself, and I don't need to prove this to you. This won't happen. This doesn't happen. This is not permissible in the market. And if it does happen, it's an anomaly. It's not the normal, it's an anomaly. Maybe manual intervention, maybe there was a bomb, maybe some news dropped that I wasn't aware of, right? Something happened that was a manual intervention because price doesn't book that way. It's inefficient for liquidity distribution. You need to pair the buy stops with a sell stop objective. Okay, that's what that piece of price action looks like. So obviously, now we can say what happened down here. Well, price did exactly what we expected it to do yesterday. Sold off into our point of interest. But it didn't hit that PD array yet, did it? Here are our sell stops. So again, another case study. The market this morning, as my mentorship stream knows, and the guys in premium, hopefully Gabe was able to pick up on this, did not trade in to sell side liquidity yet. So it had failed to make the run into its liquidity objective. So the market here has reversed. So let's look at the market cycles again. accumulation, expansion, accumulation, expansion, retracement, expansion, accumulation, expansion, reversal, change in the state of delivery. Look where price comes directly back into today. The change in the state of delivery, right? Okay, cool. So expansion, right? Accumulation, expansion, reversal, accumulation. Let me draw it out cleaner. Okay, so now once we've reversed, what we cannot do from this accumulation is what? What can we not do in here? What's not permissible for price to do? Reverse, right? Reverse, go down is absolutely permissible, right? We can go down and trade lower because what is the phase of market delivery here? Is it bullish or bearish? What cycle are we in? A bearish continuation or a bullish retracement? What do we say this thing right here was called? Changing the delivery state, right? So now we are in a bearish displacement, or in this case, a bearish expansion. So a bearish expansion, right, cannot change its state of delivery from an accumulation. Simple enough. Okay, so now we start to accumulate. So look at the similarities. I mean, this is a beautiful case study for market cycles, and I'm really glad today printed this way because I wanted to show you guys this, which is why I'm taking aside from our, our psychology lecture, because the similarities here are identical on both sides of the market. If we want to trade higher, here's the question, and it's no longer written on the screen. What is the only way we can trade higher? AMD continuation or AMD reversal? I mean, obviously, in this case. Manipulate. So is it going to be is it going to be, here, one is AMD reversal, one is AMD continuation. If we want to trade higher. Which one? One or two, guys? AMDR, 1, perfect. You guys can see that the market wants to reach into this dealing range, which I have marked out. I also have to flip the order so you can see premium and discount like this. If the market wants to reach up into a premium of the market, i.e. reverse from a bearish distribution into a bullish retracement on the lower time frame. Remember, a higher time frame retracement is a lower time frame reversal. This must perform an AMDR type of move. Perfect. So now going into news, I already know what to expect. What can happen? Say we want to trade lower. The market will always do this first. Okay? If we want to trade lower, we can have accumulation, right? Distribution, retracement, expansion. Or we can have accumulation, manipulation, distribution, retracement, expansion. Both of these are the case where the market goes lower, okay? So it doesn't need to purge these highs to continue lower. Market can easily go from expansion into accumulation into expansion. It can also go from expansion into accumulation into manipulation into distribution. So the market here has a choice. If it wants to go, right, lower, it's permissible for the market to do this. That's fine. This is just A into D. Right? There doesn't need to be a manipulation. Now, obviously, you prefer there to be a manipulation to go lower. However, if the market is going to trade higher on the day, there's only one option. It's AMD, meaning I come into this 8:30 news with an understanding that if I have no bias, so I'm saying price could either reach into this liquidity here. Here's the powerful part, guys. Listen closely. If price wants to reach into here, or if price wants to reach up into here, right? Either of those two areas. All I have to do is study the nature by which this consolidation is broken. Remember, if we do this, A, expansion, retracement, expansion, I know to target here. Now, if we do this, what do you think I'm going to do? If the market goes higher first, what is the only direction I trade in? Someone tell me, long or short? So here I trade, obviously, short, because this is accumulation into distribution, into retracement, into distribution. Perfectly permissible. It doesn't have to manipulate the highs if we're continuing. Remember, continuing of trend. Bearish trend, bearish trend. Short. Park got, yeah, AZ. It's not going to be long because if the market trades higher first, what would this be? Is the market allowed to go from an accumulation into a reversal? Yes or no? Everyone say it in chat. This is not the easiest topic, which is why I wanted to spend time in the video talking about this. That would be manipulation. So short. Yes, yes, perfect. So the market is not allowed to move like this. Off the bearish trend. Remember, this is the trend. This is the direction of the trend now. So if we see a move from news that moves this accumulated range higher, the obvious draw for me all day is going to be what? Sell side liquidity. Notice how we have a failure swing then if we didn't trade lower. So now I trade lower into sell side liquidity objectives. Really easy kind of trade for me, right? Just like up here. Very similar, but in this case we're getting a full reversal from the bullish trend. Okay, if we purge lower first, what direction am I looking for? Well, it could be either, right? It could be this. It could be short expansion and then another leg short. But once we get what did my students see me look for this morning? A change in the state of delivery. Yes, which is what happened on the ES right in here. Right? It happened on the NASDAQ right in here. Once this happens, the draw on liquidity is now higher. Now I know this is an AMD reversal, which is a higher time frame retracement. That's why the price doesn't need to come all the way into this high like it does on ES, but I can at least seek premium of the range. So if you were at my mentorship stream this morning, we talked about this. So this is the target then, right? The draw on liquidity for me, and this SIST is the refined level of that draw on liquidity. If we get a AMD reversal, so expansion, accumulation, manipulation, change in state of delivery is going to be here. Distribution, fantastic. Now I know to look for longs and no longer look to short this gap.